So a lot of the past was characterized by just a lack of clarity. It wasn't like outright bans or issues that were critical threats to the space, but this kind of like messy middle where nothing was clear. And I would argue we've gotten a lot of clarity recently, especially in the mining space that had been just kind of lingering for years and years. And once that clarity is established, it's much harder to walk it back than it is to just like let it exist in a state of unclarity.
Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe. Hey, my next guest is the founder of a Bitcoin mining firm and helping high-income professionals turn digital infrastructure into real cash flow. He's a former real estate entrepreneur who turned 500K mistake into freedom-aligned business. And in this episode, he explains why Bitcoin mining isn't speculation, but really it's just business operations. He puts it, it's like a mix between being the military and Visa. You're helping process transactions, but you're also protecting the network. We break down how this model works and how there are some parallels with real estate as well, including depreciation, operating leverage, and capital control. And if you've ever been curious about Bitcoin investing beyond the headlines, this is the business model to understand. We break down how this model works and some of the parallels with commercial real estate, with depreciation, the business model, operating leverage, and capital control. And if you've ever been curious about Bitcoin investing beyond the headlines, this is the business model to understand. If you're curious to dive deeper into Bitcoin mining, check out Beau's work at Abundant Minds and explore what the infrastructure play really looks like. And if you want more like this, join the Arita Capital newsletter, where every 2 weeks we share investing frameworks, guest takeaways, and smarter ways to build passive income. So enjoy this episode, take notes, like, share, subscribe, all the places. Please enjoy. Mr. Beau Turner, thank you so much for being here. Founder of Abundant Minds, Bitcoin mining strategist, real estate entrepreneur, and tech visionary. Super stoked that you're here on Path to Passive Show. We were talking about getting into it and your route to be where you are today, and how there's so many crossovers for the audience from where you came from real estate, but there's things about data centers, AI, finance, and so forth. And so it's really cool to have this intersection and have you on the show. Please just quickly introduce yourself. Who are you? What do you do? Why do you love what you do? And then we'll get into it.
Well, thanks for having me, Stephen. I'm super looking forward to this. It seems like there's a lot of crossover with just my journey and the kind of person that you speak to. So excited to get into that. I started out with a degree in engineering management from SMU. So, very much of the engineering mindset and just kind of interested in how things work. But I was not interested in working for someone else. So, out of college, I was not looking for an engineering job. I was looking to start my own business, starting my own kind of software product or startup. I didn't have that golden idea that was really hitting right out of college.
Mhm.
And so instead I went and started a real estate business and spent about a decade just building a property portfolio, getting into creative financing, really looking to build that passive income stream that's been the vehicle to wealth for so many people.
Mhm.
But I always had Bitcoin in the back of my mind. So it was first introduced to me while I was in school. I got a few thousand worth. That few thousand turned into quite a bit in a very short period of time, probably more money than any college student should have in front of their face to make a decision with.
Sure.
And luckily, didn't do anything with it. So it just kind of sat. I wrote it up, I wrote it down. And for many years, really just forgot about it. So it was not a top of mind focus for me. It wasn't something that I gave full time attention to,
Hmm.
but was always very interested in it, both from a values perspective and also just saw a ton of upside in it as an investment. So it was hitting all the boxes. And then in 2020, my wife actually said, "Hey, I got this email about Bitcoin. I remember you had like kind of interest in it. And, like maybe we have some. Like I think you should look back into it." I was like, "Okay, sure. Like love Bitcoin. I'll take a look." And at that point, I had been managing rental properties and building a real estate portfolio and doing deals in Texas for enough years that I was starting to get tired of it and kind of
Mm,
open to something different. So, to make a long story short, we started liquidating our real estate portfolio. We moved from Texas up to Oregon,
mhm.
and I started to figure out how to shift all of that rental property into Bitcoin and now Bitcoin mining. And the reason that I didn't just go all in on Bitcoin itself was I love getting cash flow. I love
Mhm.
getting passive income. And the only way to do that without lending out your Bitcoin to counterparties who can lose it is to go mine it yourself. So, had enough data center coursework and enough engineering background that I knew that this was a viable model,
Mhm.
but got burned with some pretty bad partners early on. So, that was about a $500,000 mistake of sending servers to the wrong person who
Oh,
managed them poorly. And it's a rough story. We don't have to go all the way into it, but suffice it to say, I wouldn't have built my company without that experience. I would have never offered the service of helping people get into Bitcoin mining and managing the service for them had I not had a really brutal management experience myself. So,
sure.
to that man, I owe the service and the value that I now bring people today. And here we are.
Yeah, it's kinda crazy how that works, right? Like, it's not fun in the middle of it, and in fact, it sucks and can more than suck, but, it's what we choose to do, right? And I know that sounds so cliche and all that, but, there's more than one case I can remember too where it was, you were kinda deep in it, but you've kinda figured it out, right?
I love the saying that your purpose sits next to the worst thing that's ever happened to you.
Mm.
And at least in the business and investing world, that was the worst thing that ever happened to me. So, happy to have found my purpose.
Awesome. One of the things you said was that um, Bitcoin was attractive to you from a values perspective. Yeah, you learned about it while you were in college. You said it was a buddy of yours. Um, I hope you're paying that buddy in full, however that looks between the two of you. Uh, but you said from the values perspective. What does that mean? How do you mean values perspective?
So, Bitcoin is interesting not just because it's a wealth vehicle, but it's also a freedom vehicle. And especially in the US, we're kind of disconnected from the core problems that Bitcoin solves on a day to day basis. It's great to protect your wealth from inflation, have a non-counterfeitable, non-printable asset by a
Hmm.
government entity. That's wonderful. But the use case of protecting people from financial censorship and the ability for any sort of third party who you didn't elect to restrict you from using your own assets. I've always been of the kind of libertarian mindset
Hmm.
where as long as I'm not hurting somebody, I should probably be free to do basically anything that I want. And this seemed like the technological just epitome of that turned into something that people could use. And the more that I studied it, the more that I was exposed to it, the more I realized that this was probably the most freedom creating technology that many of us have ever seen.
Why how did you what did you, go for in college? It was something you were talking about having those classes in data centers. It was something, must be something related to understanding something industrial as well, right?
Yeah, so it's a very common major with different names, but engineering management and information systems. And
Okay.
it's basically a survey of every kind of engineering that you could imagine. And you
Mhm.
typically focus on something in particular. So for me, it was entrepreneurship and data center work with kind of a financial bent. So your goal is to learn as much about how to make any business on earth, and specifically technical businesses, more efficient, more profitable, more likely to succeed. And so that was where that background came in.
Cool. So you're definitely talking to the right audience like you were talking about. Um, let's dive into this as an investment. I was telling you briefly, right? I mean, I've been bouncing around in Amazon for the last 11 years and some other companies previous to that. And, you've been kept up with technology to a degree too, most definitely, with your background and I'm sure just interests along the way where you've seen whatever the technology is at that time, notably some things that have kind of evolved. You hear about Bitcoin and blockchain, and of course the flavor of the foreseeable future here is going to be AI, right? And so talk to me about Bitcoin as an investment though. we know that we can go and buy it, right? But past that, like how does it offer it as an investment?
So the two distinctions here would be Bitcoin and Bitcoin mining. So Bitcoin, the asset, I would say is most attractive as an investment, as a store of value in a world where inflation is rampant. Many different assets don't have the characteristics of holding value over the long term, at least in terms of the expansion of the money supply. And we could go into what that means. But basically, if you measure anything over the long run, like the S&P, real
Mhm.
estate, any of these longer term things that most people consider safe, they essentially just keep pace with the expansion of the money supply. And Bitcoin is unique in the sense that it's very handily outpaced that expansion. And I would say, at least in terms of how it's designed, it's likely to keep outpacing that expansion just because it's still just barely penetrated the market of global assets. So the best analogy that most people have and that I'll rely on here is digital gold, which is just a doesn't do really anything except for hold value over long periods of time.
Mhm.
And Bitcoin as a technology is an improvement in pretty much every facet of gold as a store of value technology. And then you layer on these things like it being programmable and transferable across the world in minutes with effectively no fee, easy to verify, and essentially just better money in every way that you could imagine. The fact that it is a $2 trillion asset instead of a $20 trillion asset like gold, despite heavily trouncing it in pretty much every category you could imagine for money, is an opportunity in itself. So that would be the investment case for Bitcoin to me, at least in the short term, is it's 10 times better than gold and it's still a tenth of the value.
Tell me why, or give some examples for listener on what makes it better than gold.
So gold, there's these seven properties of money, and whether you're comparing Bitcoin or gold or the U.S. dollar, and I say money specifically because currency and money are two different ways to look at it. Currency would just be something you're exchanging for
Mhm.
goods. Money is something that's storing value, and you can also exchange for goods. Money would be the most saleable good that you could imagine.
Okay.
And so there's these seven properties of money that you're evaluating these different types on. And I might miss one, but they are scarcity, divisibility, fungibility, transferability, verifiability. I already said durability. I know I'm going to miss one.
No worries.
so
Those are good though. Definitely that does make some sense. So you're saying that on all of those attributes, it is improved. I mean, there's more of uh, higher degrees in each of those attributes.
Yeah, with the exception being longevity. So part of what makes a great money is how long people have accepted it as money.
Mm,
How much in the collective consciousness is it that this is money and how many people will take it as such? And Bitcoin is the only one that is, essentially a startup money. So it hasn't been around for long enough to be used by most people in the world, which is a ding against it, but
mhm.
it's also the reason that there's still opportunity. It's the reason that there's ever opportunity in early stage companies is because not everybody knows about it yet. Not everybody sees the value proposition yet. It's still penetrating the market. So that would be the one quality that it's still lacking, which you could argue we're 15 years into it now. It's starting to get that establishment of a long enough track record where not just people with a high risk tolerance can accept it as money,
Yep.
but institutions, funds,
Oh yeah.
some of the largest pools of capital in the world.
Definitely. Okay, so we were making the distinction between Bitcoin as well as Bitcoin mining. Bitcoin being the asset, and there's seven different attributes of how did you call it, money? That
The
there
seven properties of money.
seven
Yes.
properties, money, and then we have on this other hand we have Bitcoin mining as an investment. So define that one. What exactly is that?
So if you're going to call Bitcoin digital gold, then Bitcoin mining would be digital gold mining, essentially. Rather than you holding on to a bearer asset that just sits and either appreciates or holds its value, you're actually going out into the market. and looking to produce the asset at a discount. And then, depending on what your strategy is, you might either be selling that asset into the market and having cash flow and taking a profit, or you're treating that digital gold mine as a way for you to stack a store of that asset for the long term that you're not intending to sell, but you're still getting at a discount. And essentially, in mining's case, using the vehicle of an operating business to get more favorable tax treatment than you would if you're just, say, buying Bitcoin with after tax money.
Got it. So I've done some research on this, and I have some understanding of the technical aspects. But I'm wondering from your perspective here to maybe clear some of this up for me, or just we can start from a clear slate. What does that mean, Bitcoin mining exactly?
The simple version of what it means is turning energy into organized computing power, which then secures a monetary network that you get rewarded for in that monetary network's native currency. So, in a very mechanical sense, you're just turning energy into money.
Okay, it has to do with solving quote unquote math problems, right?
That's a great misconception. So
Okay.
that's the simplest way of explaining it as you're solving math problems. The more accurate way to explain it would be there's millions of computers all around the world guessing a random number trillions of times a second, trying to find a random number that essentially wins a lottery every 10 minutes. And that winning of the lottery is completing a, let's call it a puzzle piece
Hmm.
that puzzle gets finished and is added to the chain of all the transactions that have ever existed, and you get paid a reward for completing that puzzle piece and adding those transactions. But more accurate than solving math problems is truly a random number guessing game.
Got it. And you get paid, or the miners get paid. Why? I mean, sure, they're adding to create a bigger picture of the puzzle, but
Mhm.
why do they get paid?
The reason that they're getting paid, and the best analogy I have for this is it's like a mix between being the military and Visa. You're helping process transactions, which incurs a fee, but you're also helping protect the network. So when you're guessing those random numbers, you're expending energy and computing power to secure a network effectively with cryptography that it would just be too expensive to attack. So, and the incentives are aligned as such that if you had all the energy to attack that network, it would
Hmm.
actually be more profitable to just participate honestly. So think of it as you're not only helping pass transactions through, add them to the blockchain, but also putting up a wall of security that makes it hard to change, hard to attack, and gives the money that kind of value and security that people want if they're storing hundreds of millions or billions of dollars in it.
Okay, that makes sense. That provides the extra credibility because there's more, like the terminology being there's more uh, people who understand add to how do you call it, like the trust framework of ledgers or so forth, right?
Mhm. Yeah, so it's like rather than when someone can like hack your code base, for example, someone can just like go through and change a line of code and suddenly the behavior is totally different on the system.
Hmm.
In order for that to be true with Bitcoin, you'd have to continuously expend gigawatts of energy to keep that true. So to essentially keep your falsification
Got it.
of the ledger true into the future. So it's this, if you want to think of it like a just a very heavy train headed in one direction that's always got more and more power going in the right direction, you would have to match that energy in the opposing way over a long period of time to stop the ledger from being honest.
Totally got it. Okay, cool. So from an investment perspective, we're continuously adding energy and compute, right, to this network so that it can do what you're talking about and continuously solve puzzle pieces to add to the bigger network. How does this that's accurate, right?
That is a great summation.
Okay. So how does that translate from this mining perspective to an investment for someone looking to invest?
So in this case, you would think of it like someone who manufactures a finished good, right? We're putting energy and a process together to manufacture this thing called Bitcoin. It's just like if I'm selling you a t-shirt, you're buying a t-shirt for a very different price than I'm manufacturing it for. So people who are mining Bitcoin, they are not mining it for today. We're at 110,000 or somewhere in that range.
Mm-hmm.
They're mining a Bitcoin for on an operating basis, 50 to 60,000. So you're making a 50% margin, give or take, on that finished good every time you make it.
Got it.
So the longer that you do that, the more efficiently that you do that, you have an operating business that is very profitable or gets you an asset at a discount.
Got it. Okay. Makes a ton of sense. So, like you said, if you are building it at a discount, um, your cost of goods sold effectively is that 60K as an example, and the market
Mhm.
wants the 100K current market price, whatever it is today, and so that is the business model.
Yep, exactly. And for people who are looking at investing in this, specifically like high earners and high net worth individuals, you're often looking at what you do with after tax money. Or said a different way, you might have a tax liability and you're looking for ways to reduce that. And one of the ways to reduce that is to have an operating business with expenses, physical goods, depreciation, all of these things that go into running a business that
Mhm,
are not true if you're just buying an intangible good like Bitcoin on the market. So many
mhm.
people will come and work with us, not just because they want to get Bitcoin at a discount, that's wonderful, but also because they're looking to offset some income. So they're able to, depending on how you structure it, get first year depreciation on those machines, write off a large portion of the cost of those machines, pay for power operations. You can prepay for that kind of thing as well, and
Mhm.
front load a lot of the costs so that not only are you getting Bitcoin at a discount, essentially making more Bitcoin with the same capital, but also offsetting a potentially high tax year.
Got it. I mean, that makes perfect sense because all of that equipment is I was going to say things uh, easier language here would be just capital expenditure, capex that you can write off.
Yes, exactly.
Yeah.
And it's
Uh,
on a really fast depreciation schedule, right? So when you're buying real estate, for example, single family homes are on a 27.5 year
mhm.
depreciation schedule, unless you're doing a cost segregation, which in itself is kind of onerous. I almost never found it worth it to do. Computing equipment, 5 year depreciation schedule. So it's a really fast payoff, a really fast write down that in many cases gives people a more attractive lever over the short term.
Yeah, I mean, it sounds similar. I mean, I don't know anyone who's doing cost segs on single family homes, but that's certainly a case for commercial. So it sounds like
Yeah.
because it's a business, it's really commercial equipment. So it would be a similar structure then, right?
Yep, exactly. And not to give tax, legal, or financial
Right.
advice because I'm not qualified to give any of those things. But if you are primarily a mining business as well, that's directly in line with how you are producing your main income. So you likely can qualify for Section 179, which is 100% write down up to a certain threshold. So not even the 40% bonus depreciation,
Hmm.
which is pretty widely applicable, but that 100%, which people really love to write down 100% of what they spend money on.
Absolutely. Definitely, definitely. So is this you were talking about so this would be what, passive losses?
Depends on how you structure it.
Okay.
So for my business, for example, we are very active in the business. We are operating every day. I'm, doing site visits to the data center. I'm sitting at a desk running a Bitcoin mining business
Hmm.
pretty much every day of my life. And so that is active income. For people that are doing this and it's not, 100 to 500 hours where they're meaningfully contributing to it,
Yep.
definitely, I would say more likely to be passive losses.
Yeah, because that sounds very similar. I've talked about as a real estate professional. It's kind of what you're
Yes,
talking about, right?
exactly.
That status. So then, just so that we can get sort of a tangible example, again, not legal, not tax, not any of those advices, all the things. Um, it's what does that look like? Is this I imagine most if someone that wants to invest here, is this a minimum 50K? Is it 100K? Is it more?
So most of our clients are coming in somewhere between 50 and 100K,
Hmm.
but you can get as little as one machine, which right now is like 6,500 to 10K approximately. It moves around with the price of Bitcoin, so hard to say what it'll be when this airs or even a few months when someone might be listening to it.
Sure.
But yeah, you can get in essentially for as little as 10K. Um, we do have people who start with a single unit or start with a couple units and then quickly realize that it works very well and is really attractive to just get passive cash flow that's truly passive, denominated in Bitcoin, and then scale up to tens, hundreds of units. And so they might start with a 10K outlay and then work their way up to a multi-million dollar spend.
Got it. All right. So the reason why I was bringing that up, can we just super rough guidelines going to depend on whoever comes to you. The numbers will vary. If you could, an example of, I don't know if you want to do this by like a unit cost type of thing or something bigger, but what can someone expect to get back if it's like one unit at the $6,000 marker for today's date, as an example?
So I'll do it this way because most people are going to compare it to, like, say, 100K in a rental property or 100K in something else. So
Hmm.
we'll say 10 top of the line units. These would be equivalent to like S21 XP is the technical spec for the machine that we're talking about.
Got it.
10 of those for 100K upfront. The operating cost for those 10 units for each unit is 225 a month. So 2250 per month in operating costs. You can expect top line revenues between 4500 and 6K at Bitcoin's price today, which is, somewhere between 90 and 110 over the
Hmm.
last few weeks. And after paying your expenses, you're essentially expecting a net of around 3,000. So you're looking, assuming you're in a vacuum, nothing happens to Bitcoin price, nothing else happens to the network difficulty, about a 30% return in the year, 25 to 35%. Again, just sitting in a vacuum, Bitcoin doesn't move. Over the period from 2020 to 2024, Bitcoin went up 6x, picking, just like January 1, 2020. If you happen to start mining at our hosted rates at that point, and then we're just selling your coin all the way through, mining was about a 10x over that 4 year period. So in a vacuum, you're expecting about a 3 year ROI. Historically, over a 4 year period, you're looking at somewhere between a 5 to 10x would be reasonable.
So is that I guess there's a couple questions for me there. The first one is you mentioned a 30% number to start with.
Mhm.
So you were talking about, for let's forget the amount of machines at the moment. Let's just talk. I mean, I understand and I appreciate that breakdown. Just going for the simple math is for the 100K in,
Mhm.
would do you do like some kind of annualized rate as well, or does that not even, everything can be annualized for sure? And I hear what you were talking about historically over the last 4 years. But I guess there's kind of two parts here. Someone comes and invests, they're coming in as an LP, a limited partner. It's terminology we talk a lot about on the show. Um, and so, is there a certain type of hold time to invest with you? I imagine there would be, because we got to set up all the compute and it has to be working for a period of time to get the Bitcoin.
So I'm really glad you asked that question because they actually aren't an LP. So you're actually buying a physical piece of equipment, and then we are a managed service provider
Got
and
it.
nothing else. So you own the asset. If you wanted to sell it 12 months in, 36 months in, 5 years in, whatever, that is your computer. You can choose to resell it at any point. There's no like capital call, there's no
Got it.
lockup period. I mean, we do sign 1 year contracts as the most standard way that people get in because
Hmm.
I don't think that this is the kind of thing that you should trade in and out of.
Hmm.
Definitely, if you're thinking about this, I mean, yes, you can do whatever you want whenever you want.
Hmm.
But I would say a minimum 3 year time horizon to let the thesis play out. And honestly, 5 years is probably a good benchmark to just set your expectations, especially
Cool.
because that's when the depreciation schedule lines up. But
Got
the
it.
reason we're structured the way we are is exactly what you just described. People can make their own decision whenever they want to make it. You're not beholden to what I choose to do with the company. It's just your equipment that you're trusting me to run, maintain, operate, optimize. Um, and then you can set up whatever vehicle you want. So we have people who are just doing this personally. They've got sole proprietorship. They're doing it within its own business entity. They're doing it as part of an existing business they have that has additional income. We have people who are setting up small funds. So they're essentially
Hmm.
treating us as a fulfillment partner and then doing that GPLP structure with a group of people they know. And the way that we have it structured means that you can be super flexible with how you set it up in that way. It makes the most sense for you and your situation to get the maximum benefit.
Cool. Makes sense. So, a lot of peers and people listening will think, all right, managed services, I understand that model. But part of that, even managed service structures can vary. So, if I own the piece of equipment, I say, Bo, looking to buy a piece of equipment, you can manage a lot of things. Uh, and each one you said it was like somewhere around 6,600 or so, right? Then am I paying for what do I end up paying for on the operating side? Like parts and
Yeah.
all that too?
So on the operating side, that's covering your electricity, management, hosting, maintenance, spare parts, cleanings, like essentially everything. You should not have another line item with us other than that 225 a month per unit. And the reason for that is that for that experience that I mentioned at the beginning of the call, I did this. I bought, 100 units and sent them to this guy, which that's the first part we don't take outside units. We do the procurement for you because so many mistakes are made in that process,
Yep.
and just bad stories that are not even my own. So we're taking care of procurement for you. You can get one of the units that we're working with. The nightmare experience that I had was not only how long it took to get my units online, but once they were online, I got the privilege of having to pay essentially a college intern 30K in repair bills to not repair things properly.
Mhm.
And that was a pretty significant downer,
Yeah.
I guess would be the technical term. And so when I built the business and started offering the service, I was like, look, I never want someone to be surprised by a line item because you're probably, building out a spreadsheet and a pro forma for yourself that's based on certain assumptions.
Exactly.
And if something comes in and messes that up, just like in real estate, when you've got a bad tenant that
Mhm.
has a turnover that costs you more than you're expecting, that can just wipe out the money that you were expecting to make that year. And that experience sucks. And I don't like people having experiences like that. So flat fee, all inclusive. The only thing that it can't cover is after your 12-month machine warranty is up, the hash boards are something that we can't like lock a price on.
Mhm.
And so if we ever have to replace a hash board, which is rare after 12 months, most things are going to fail within 12 months if they're going to fail. That we're just passing through at cost. So we'd procure it for you, but we don't mark up parts. We don't charge for labor, none of that.
Okay.
So all that to say, it's truly 225 a month. You should never get anything on top of that.
Got it. That's where your 25 or some oddish number came from that 250 times 12ish.
Exactly.
Got it. So then, um, so that we don't have to have anyone remember or recall the numbers, what can someone expect to make off of that then at the end of the year?
So yeah, to go back to, I'll say single unit this time. So
Yeah.
you got one 10K unit. That single unit costs $225 a month to operate. On a monthly basis right now, it's making anywhere from 450 to 500 bucks a month. So give or take 3,000 bucks net at the end of the year after 12 months of that cash flow, which close to a 3-year return on your investment, assuming Bitcoin is static for 3 years, which, in case anybody's not looking at a price chart currently, has never ever happened.
Yeah. What was that last part? It could be around 4,000 or 400 a month.
450 in revenue top line
Yep.
minus that 225 a month.
Yep.
So essentially 50% operating margin.
Got it. And that gets paid, the income, the revenue comes in because
Mhm.
of what gets mined and then what you guys will sell to the market.
So I'm glad you asked this question too, because that's a really frequent misconception. We don't ever touch your Bitcoin. So you're not getting dollars from me. In fact, you're not getting anything from me. I'm just configuring a computer for you,
Mhm.
and then it's paying you Bitcoin, and you get to do whatever you want to do with the Bitcoin. Your pool account, the way that you get your payouts is totally on your end. In fact, I can't even see how much you're earning. So the way that we set this up, again, you're trying to minimize like how much power, control, like counterparty risk
Exposure.
you've got. So we're helping you configure it, of course, because most people, like many of our clients, have never set up a Bitcoin wallet before. So we're not just like throwing you into the cold to figure out how to set any of this stuff up.
Yeah.
But we want it to be totally in your control. So after it's set up, you're managing how your payouts work completely on your end, and that doesn't take time, and it's not necessarily complex, but it is important that it's under your control. So that said, you're paying us 225 a month.
Mhm.
That can be in dollars, that can be in Bitcoin, whatever, but you are earning Bitcoin natively. And I would highly recommend people to hold on to their coins whenever they can, because the opportunity cost of
Yeah.
selling your coin to pay for electricity. Uh, I like to talk about one of our team members who's on the tech team who's been mining since 2012. He's spent well over 100 Bitcoin on electricity costs
Mhm.
in the early days, and he would tell you he would rather have the Bitcoin. He
Yeah.
probably wouldn't be doing such an amazing job managing data centers with us. He would probably be in Hawaii, but thankfully, I get to work with him and lean on his experience. But he would definitely tell you, hold on to your coin, pay your electric bill with dollars. But ultimately, it's your money. You get to do whatever you want with it.
Got it. Sound advice though. From the industry. So where does that $400 figure come from then? Is it that the value of mine or of coin mined equals about that?
Exactly.
Okay,
Yeah.
got it.
I'm just quoting in dollars because that's how most people think on it. I mean, as
Yeah.
much as I live in the Bitcoin space, it's still my
Mhm.
my conceptual unit of account. So I'm saying $450. What I really mean is point
Point.
zero zero four five Bitcoin.
Got it, got it. Cool. I was just clarifying because I'm like, I think that's what that is, but because you know how it is. It's like we're in from an investment, where does the money come from? Right? Is pretty much what
Mhm.
it is. Uh
And
because
if you don't know where the yield comes from, you are the yield. I'm
you
sorry to
are
say.
the yield. You are the product. If you don't know the product, you are the product. 100% agree. Thank you, Zuckerberg and everyone else. Um, in any case, that was a joke for ads. Anyone listening, if you don't know, you are getting paid. You're the ad. On that note, and yeah, like you were talking about the depreciation costs as well with that, which really all it does is it reduces your expenses, right? Save on taxes, etc., which means you end up not earning more Bitcoin, but you save on the amount. Um, how does that work? It's you're not you'd still be paying the same to you as provider as an MSP managed service provider. Um, but tell me quickly. I know not tax, legal advice, all that stuff. But how does that actually get applied? Where does that get applied from a tax saving perspective?
Yeah, so it's just like if you're running a business, the miner that you buy is capital equipment, so you can depreciate that over its lifespan. So you get to write that off against income, up to in 2025 40% bonus
Hmm.
depreciation. So on your 10K machine, 4,000 right off the top goes against your income. And then that 225 a month is an operating expense. So that's directly against any income that you earn. So those
Mm,
are your two main levers that you're pulling is depreciation offsets and then operating expense offsets.
interesting. Got it. The asset that you earn is the Bitcoin, and you earn it in monetary value, but you're able to write off based off of that as far as the three-letter agencies are concerned.
Mhm.
Okay.
And when you mine Bitcoin, that is earned income. So you're wanting your operating expenses and your depreciation to offset that as well, to be clear. And not to dive, like 10,000 feet down the tax rabbit hole,
Yeah.
but Bitcoin mining is treated in funky ways in the tax code,
Yeah.
which I think will change over the next couple of years, just based on the kind of progression of the other funky things that have changed over the last few years with Bitcoin. They recently revised indefinite intangible accounting, which is essentially like if you had Bitcoin at 100K and it went down to 20K and then back up to 100 forever on your balance sheet, it's
Hmm.
marked down to 20K. It doesn't matter what happens in the future. So that was fixed.
Hmm.
We're now fair value accounting with Bitcoin on your balance sheet. Michael Saylor is very happy about that.
Yeah.
The other funky thing, which applies to mining, is if you are, to use the analogy of a gold miner, when you mine that gold out of the ground, you are not charged income tax on that gold until you sell it. So you could hold that gold on your balance sheet for however long you want,
Yep.
and you don't have earned income tax on that
Yeah.
gold until you sell it in the market. Bitcoin, for whatever reason, as soon as you mine it, as soon as it's within your possession or under your control, that is earned income. So you've got to offset that with those operating expenses, offset it with that depreciation. And then say you mine it on the day you mine it, it's 100K, and then it's 200K a year later. You sell it at 200K, you also have capital gains.
Yep.
So you've got double taxation
Hmm.
on your mining rewards. Still works out to be just fine, but a huge unlock for Bitcoin miners in the tax code, I think, in the next couple of years, especially considering the members of the administration, the family of the administration are involved in mining, probably will be unlocking the ability to just hold onto your coin and not have it taxed as soon as it's mined.
Yeah. I mean, conceptually would be very similar. So, um, I know we spent a long time in this. Thank you. I do want to. I just wanted to, important to understand like some of the technical aspects along the way, and stair step that. Um, Everything has risk. People say it doesn't have
Mhm.
risk. They're lying to you. That's that's pretty much what it is, right? So just kind of cubing that up. What are some of the perceived or real risks that there are with Bitcoin mining?
Well, I'm really glad that you asked everything you did because, in my opinion, the biggest risk that people have in any investment is not understanding it.
Hmm.
And they might get into it and have no idea what they're getting in. And then at the worst possible time, get shaken out because they don't understand what they own and maybe didn't do enough upfront homework to really have the conviction that's required when you're doing something that, at least in dollar terms, like this is a volatile market. It changes by the day. It's very fast moving.
Hmm.
If you don't build conviction and a really good base of understanding, you absolutely will get thrown out at the wrong time, and you'll sell, and then you'll be mad at yourself
Yes.
because as soon as you sell, it rips back up. That's just how the laws of physics work.
Yeah.
Uh, as far as risks in mining, Bitcoin is such a beautiful asset because it's intangible, it's effectively immortal, it's non-physical, it doesn't degrade, it's very challenging to steal when it's properly custodied.
Hmm.
You can't destroy it easily. It's got all of these, not just the qualities of money, but the qualities of a technology that makes it really anti-fragile, and extremely robust. And part of that is because it's in the digital world, and if properly self-custodied, has effectively no counterparty risk. Mining, if say you're mining with us, I'm now your counterparty, and you're trusting me to fulfill on a service where I'm providing you energy and service and uptime and optimization and all of the above. Where if that doesn't happen, then your thesis of making more Bitcoin with the same amount of money is totally invalidated. So you have to trust that I'm going to fulfill my promise of operating your machines and keeping them online and keeping them healthy for the entire lifespan,
Hmm.
and not running my business in a really dumb way and, like the person that I worked with, eventually going bankrupt.
Mm.
So that's the primary risk, is that your greatest downfall will be selecting a bad partner who doesn't know what they're doing or hasn't controlled the environment for all the variables that can pop up. So whether it's the climate, like we're in Oregon is very cool, it's very stable. There's not a lot of natural disasters. The miners like to live a long time here because it's such a stable, easy climate for them to exist in. The air
Hmm.
is really clean. There's plenty of stories that I won't, like you could spend hours talking about
Yeah, I'm
miners
sure.
that live in Texas or Georgia or really anywhere in the South where they've not lived to the full extent of their lifespan. So controlling your environment's really important. Controlling your power is really important too. So we're based on the Columbia River hydropower network, very stable source of power that doesn't fluctuate like fuel prices do.
Hmm.
That was another issue with one of my hosts was not having locked in power contracts where they were going to deploy me and then suddenly their cost of procuring power went higher than the rate that they offered me to host my machines.
Problem.
So they had
Yep.
no incentive to turn me on.
Yep.
Um, so just things like that. This is an operating business and it comes with the risks of operating a business. And the first one and probably most important one is counterparty risk. If you've got the right person operating the service, operating the business, then they will properly control for all of the risks that are in the environment.
And to translate that counterparty risk, I mean, we talk a lot about operating partners, which is basically kind of what you're talking about here, except
Yes.
it's more specific as a managed service partner, right?
Hmm.
But counterparty risk, one of the things that comes to mind, you're talking about this is I'm thinking security, um, which from a physical perspective, that's true. We're talking data centers, um, but uh, but not around anything to do from a virtual perspective other than the machine going off of line, which is still physical security. I was just making the delineation between um, if I'm buying in, then like you said earlier, you're helping me to set up my wallet, my all the things that hold my Bitcoin. So if something happens with my machine, so to speak, in your data center, then I don't lose any of my Bitcoin because it's that wallet is also hosted somewhere else, right?
Hmm. Yeah, exactly.
So what else were you gonna add there? Anything else?
Uh, when I think of counterparty risk, it's just anything that you're trusting someone else to fulfill that they may or may not be able to fulfill on. So in like data security, someone leaks your data, that's counterparty risk of giving somebody your data. You give a bank or a financial institution your money. Let's say they're not FDIC insured. In the Bitcoin and crypto space, there's been plenty of counterparty risk where large, what people would call wildcat banks, take on people's funds and go lend them out and then lose them. And you just took on a huge amount of counterparty risk with that institution where you gave them your funds and they couldn't give them back.
Hmm.
So anytime you're seeking to make an investment or keep something safe, you've got to think who is my counterparty and can they mitigate the risk that I'm incurring by trusting them to keep my stuff safe, whether it's physical or digital.
Got it. Yeah, there's a lot to be said about all the things that insurance does for you too. Um, so, but from a risks perspective, from your point of view, uh, you is I'm trying to think of if you're having the machine, like how does you're someone buying in, like buying a machine and with you and Bo Abundant Minds, how do they are they at potential risk to having data exposure?
No.
Yeah, I didn't think so. None of that would make sense. I mean,
Both in the I mean, it is a computer operating a data center, but
yep.
it's a really dumb computer. It can't do anything but mine Bitcoin or effectively guess a random number. If you find a different use for guessing a random number, you can run that as well, which that's its own rabbit hole. But let's just say for argument's sake,
Mhm.
all it can do is connect to the Bitcoin network and provide hash power to that network to produce Bitcoin for you. But it doesn't have like personally identifying information or any other sensitive data on it. It doesn't have storage, doesn't have RAM, none of the stuff. All it's doing is performing work.
Interesting. Enough that it needs to do the work. But yeah, nothing on there. All right, cool.
Yeah.
But from other perspectives of risk, what about from the I know this is an ever-changing space. You're talking about it, still being extremely immature, 15 years old. Any other things that are acceptable risk from your perspective of like, yes, we're going to be in this space and do the Bitcoin mining, and yes, there's some, quote unquote volatility of price, but the economics still work out for every machine that I buy, and I get way more value out of it and can do it at more efficiency. So I'm buying this asset and it, like you said, tens of multiples higher. So you have so much margin on the, you know, getting something out of this asset. But are there policy risk? Are there like what are the other risks that are that from this business perspective are you looking at? Just to make aware for us.
Yeah. Uh, I would say before this administration, you could have considered policy risk a really significant one. And I'm narrowly focusing on the U.S. right now because the
Yes.
U.S. is where most people are probably considering investing.
Yes.
I would still say there's a ton of risk to mining overseas. Yeah, just like a quick side note, mining overseas, you can often find way cheaper services, and there's a good reason for that. It's usually because you have a much higher chance of things blowing up in your face. I have personally done a couple of overseas projects. Still hoping that one of them pans out, but
Oh, no.
pretty universally not a fun experience. And thankful that it's always very small bits of capital. So that said, geographic risk is a real thing. If you're not super savvy and have a good reason to do so, I would stick to the US or Canada.
Good call. Okay.
The US specifically, there was in the last administration a lot more risk around this space because it was unclear if, well, it was pretty clear that we weren't supported. There was no direct action taken to just kill the industry outright, but it was certainly not a friendly environment.
Mhm.
We are now in a very overwhelmingly pro Bitcoin country. And structurally, there's not really unwinding that, in my opinion. Someone might argue with me and say that anything can change every 4 years, but in my opinion, the Overton window has shifted. We now have so much positive legislation, not just at the federal level, but at many different states that not only protect people's right to hold and use and transact with Bitcoin and also engage in mining activities, but also state level strategic Bitcoin reserves that are forming. So,
Hmm.
actually, state level investments in the
Interesting.
space. And then, of course, this is commonly known in the Bitcoin space, but maybe not as widely circulated news outside as the U.S. Strategic Bitcoin Reserve, where the coins that were already on the balance sheet, about 1% of the total supply of the network, are going to be held by the US government into the future. And they're exploring different ways to add more Bitcoin to the balance sheet. So I would say we're in a completely different environment now than we were 6 months ago in
Super
terms
cool.
of regulatory.
Why? So you're talking about just kind of quickly give us a taste of you were talking about there was some perception of every 4 years with the different administrations that would change the direction and potential direction of Bitcoin. But we've passed that tipping point of we have enough, there's enough momentum, there's enough things in place. Obviously, you're talking about state repositories and the federal repo repository um, as well. That administration is no longer going to be um, going to decide the fate, so to speak, of Bitcoin. Uh, Elaborate on that just briefly. Why so?
Yeah. So a lot of the past was characterized by just a lack of clarity. It wasn't like outright bans or issues that were critical threats to the space, but this kind of like messy middle where nothing was clear.
Hmm.
And I would argue we've gotten a lot of clarity recently, especially in the mining space that had been just kind of lingering for years and years. And once that clarity is established, it's much harder to walk it back than it is to just like let it exist in a state of unclarity. So rather than us being in kind of this uncertain place where you could tip to either side at any given moment, depending on the whims of the SEC chair or in the energy agencies, any of the three-letter agencies that
Hmm.
have any sort of governance over any part of this industry.
Hmm.
We've gotten enough clarity in enough places that you would have to effectively overturn a bunch of things in order to change the direction of the space. And at least in my opinion, that is much harder to do and not worth the squeeze when you have so much public support and broad-based support of an industry like this.
Got it. And so many big players getting into, right? I saw some stuff. Pennington is really big on this stuff too. I've seen recently. Well, not just recently, but yeah. Okay. So a couple other sort of rapid fire things. We've been getting in the weeds. I like how we really covered, the difference between money as well as, and Bitcoin as the asset to the mining aspects. We kind of dove deep into those technical perspectives. And thank you, because I want to know what I'd be investing in everywhere. How does this thing work? I don't want this to be investing in the black box, because, you can invest in stocks and that's cool, but you don't have any, what's happening with all the companies that you're in. Um, and a little bit about the risks. Sounds like there's enough support. There's enough things rolling forward. What about if I'm an investor? I'm thinking, okay, sounds good. It's kind of interesting that I can, buy machines at a lower price point versus the 50 or 100K, et cetera, especially when I dip my toes in. Um, um, You're not a financial advisor. I'm not a financial advisor. We're not talking about tax or legal, all the things. But I know it's repetitive, but I gotta
You
say it.
can't say it enough times when you cross every single one of those areas.
But I'm thinking about this. Maybe you can say, what do you see with your customers? What do you see with others? I'm thinking about this from an asset allocation perspective, right? Everybody's preference is different, but you talked about how your experience, just speaking experiences, you had liquidated your real estate and got into Bitcoin. Where do you see others kind of go to with is they're building their portfolio of real estate, maybe, and starting to get into Bitcoin, how much they might get up to on their portfolio from your perspective, as much as possible. But what have you seen? you know
So I've been really surprised by well, one, I've been surprised by the kind of person who's really interested in this, and I thought it would be like the Bitcoin enthusiast, the engineering type, the person who's already relatively savvy about the industry,
Yeah.
who's getting into mining specifically. And it turns out that most of our clients are like setting up their first wallet with us, and they're probably just as a general rule, like 50 or over, like a
Years old.
not what I was expecting. Yeah, I was expecting like, 25 to 45 to be the sweet spot
Yeah.
with tech experience, probably in a tech field,
Yeah.
and not the case at all.
Interesting.
Um, we do, of course, have that cohort, but I was really surprised by how much of it was people who are at or near retirement, and this is a meaningful portion of the assets they're looking to acquire, not like 1 or 5%, but like 20 to 30% in Bitcoin or mining.
Mm.
So the general rule, and I think this applies to anything, is that you should allocate to the point of your comfort level and expertise. And if you are like me, like I'm living and breathing this industry every day, it's totally reasonable that I would be nearly 100% exposed to something involved with Bitcoin
Yeah.
and then like a little bit of cash
Right.
to, not blow up. Someone who doesn't have that level of conviction and that level of background and knowledge, I would heavily advise against that, even if financially there's a promise of a large return, and I think that that's pretty risk off. Because if something happens, you're going to be the most volatile emotionally if you don't understand why you did it. So, in a reasonable sense, I would say if this is like truly your first time dipping your toe into this space, then like 1 to 5% is a great start to just get exposure. if you're feeling reasonably confident and know that this is going to be a meaningful portion of your portfolio, you can start more like 15 to 20, and I wouldn't think that that's crazy. I have been continuously surprised by people in their 70s doing exactly what I did, which, people think, okay, you're in the early stage of your career, you can take a risk like liquidating all your real estate to go all in on Bitcoin mining. Like,
Hmm.
good for you. Um, but like really established real estate investors who are not looking for risk or undue risk where they could get blown up taking really large positions in Bitcoin and mining. And it's just because they see not just the opportunity, but I think the deeper that you study this space, the less it seems like speculative upside, and the more it seems like just the least risky place that you can park something long term. And that was part of the reason that I did what I did and sold my real estate for being in the Bitcoin space was I actually saw it as a risk off move, which is very counterintuitive for someone that doesn't understand the space and probably will take a few hundred hours of reading lots of different resources before you'll come to that conclusion or be open to coming to that conclusion.
Yeah,
Um, so yeah, all that said, only take the risk that you understand that you're taking, because it doesn't matter if a spreadsheet tells you that you have the optimum Sharpe ratio if you're 90% allocated to Bitcoin. If you don't understand why you did that, you're gonna absolutely have a bad time.
100%. And I'm totally cool with counterintuitive on things too. If you're not doing some things that most people don't think is a little bit crazy, then what are you doing? Um, so some hot takes in this. This is a question that I have on top of my head here. I don't know the answer. I am not sure at all, but I'll ask it, which is, Bitcoin mining, huge. What about other coins? Is there, venturing into other types of coins as well and mining those too?
So you can, we don't, and we don't let people do it with us. And the reason is going back to, my friend and colleague who's been in the space for more than a decade, specifically in mining. He's almost never seen someone make a return in any reasonable time frame mining an altcoin. And part of the reason, there's a few reasons, but I'll say the probably the most important one is that they're much smaller networks
Hmm.
and much more easily impacted by advances in computing technology, as well as just one large player entering the pool. So, for example, you might buy a machine that looks like instead of a Bitcoin miner ROIing in 3 years, it's going to be like 6 months or something.
Hmm.
And then what happens is very shortly thereafter, a new model comes out. The network gets far more competitive. What was a 6 month ROI becomes a 12-month ROI, becomes a 24-month ROI. It just keeps extending further and further into the future. And the numbers that looked good the day that you got into it actually don't pencil out over the long term.
Got it.
So Bitcoin's well established enough that, I mean, trillions of dollars of capital, gigawatts of energy around the world. I could spin up I could use pretty much all of Amazon's capacity and devote it to Bitcoin mining, and it wouldn't really make that much of a difference. If I did that to any other network, you would be completely screwed.
Absolutely. Biggest myth about Bitcoin mining that you want to bust?
The biggest myth about Bitcoin mining is that it uses too much energy, and that's a bad thing. It should use more energy, and the more energy it uses, the more likely and quickly we get to an abundant energy future.
Tell me about that one quickly. How it's helping the planet. If there is a quickly high level overview, I know we could spend another a bunch of time on this, but
Yeah, okay, there's like 3 to 5 different cases. The most important ones are Bitcoin mining goes where no other energy consumer can and helps make energy projects, specifically renewable energy projects, viable in places that they otherwise wouldn't be, accelerating that transition. The other one that's maybe arguably cooler is that it literally removes pollutants from the air at landfills, at gas wells. So when you're creating oil, you
mhm,
naturally produce natural gas. At a landfill, you have a bunch of trash that is essentially producing a bunch of methane.
yep,
Both natural gas and the methane at a landfill are energy dense pollutants that otherwise essentially just get uh, exhausted into the atmosphere or burned at low efficiency. Bitcoin mining is the most profitable, economical, non subsidized way to make money from
Mm.
trash or a waste product and remove the worst pollutant that we know of to the atmosphere, like 20 to 80 times worse than CO2 from the atmosphere profitably.
Awesome. Yeah, I know. I'm like, short question. Let me just toss that one out there.
There's you can find for people that want to dig deeper on that. Daniel Batten is like just a rock star. He's done most of the best reporting and debunking of like climate myths around Bitcoin mining. He's a sustainability engineer, climate tech activist, all kinds of cool stuff. And he found Bitcoin mining and saw all these misconceptions and was like, oh, okay, I'm just going to rewrite the world of research with the truth and go around, basically collecting the data. Um, I could never even come close to the amount of good work this guy has done. So just look up Daniel Batten. You'll find great podcasts with him. We didn't talk as much about it on my podcast with him, so you might want to find one that's a little bit more dense. We were more in the meditation and like purpose talk when he was on our podcast, but he's great.
Solid. On that note, you have your own podcast. Talk to me about. Um, well, before you do, where else can people? Obviously, if people want to do Bitcoin mining, they can come to you. You're, Beau Turner, Abundant Minds. Where else can people go? Resources that go to get smart on Bitcoin. You have a podcast. Come check you out. Where are other places they can go to get smart about it too?
Yeah. So the easiest way to find us and get directly in touch with us would be abundantminds.com. You can also find us on any of the socials at Abundant Minds. And we did a lot of due diligence here, but if you need like a diligence checklist, if you think this is interesting, but kind of don't know what questions to ask, just message diligence, the word diligence on socials to any of our handles. It would be just at Abundant Minds. And that's pretty much every social network. And we'll give you like a 20-point checklist of what you should be asking that you maybe don't know to ask. And you actually asked quite a lot of it, Steven. So kudos to you. Um, if you just want to learn in general, we're super education forward. I think it's impossible to learn about this space in an
An
hour
hour.
and really have a good handle on it.
Yeah.
So the YouTube channel is a great resource. We post a lot of short form content on all of our socials, but the YouTube channel gets the long form videos, the short form videos, all of the podcast. The podcast is called Hosting Bitcoin, but you can find it just by searching at Abundant Minds on YouTube, and that'll get you access to pretty much everything that you could ever want to know about Bitcoin mining. And we're creating new videos every day, new long forms every week, and a podcast every couple weeks as well.
Outstanding. Beau Turner, Abundant Minds. Thanks so much for being your man. Appreciate you.
Thank you, Steven. This is great.
Cheers. Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.